Hello everyone, so welcome back to this channel, and for today's topic we're going to be starting the first topic for this bootcamp, which would be titled order block. And this is a very interesting topic in the trading space, and so many people want to know how to go about order blocks. So I'll just walk you guys through how to go about order blocks and how to use it to your own benefit. So without wasting much of your time, let's just go straight to what we have for today. Now, these are the learning objectives we are going to be having for today's lecture. And by the end of this lesson, you would be able to understand what an order block is and how to identify a valid order block, how to confirm reversals before entering a trade, and why not all order block results is always a successful or actually leads to a successful trade. So if this is something you want to learn, stick to the end of this video and make sure you subscribe to this channel, because I'll be posting much videos like this every week. Let's just jump straight to what we have for today. Now let's understand what an order block simply means, and let's get acquainted with it. Now, an order block is a price zone where large institutional buy or sell orders are being executed before the market makes a significant move. And this zone often acts as areas where prices may return before continuing its trend or change its direction. Now, let's understand what this means. Now, the first paragraph is indicating that an order block is a place where large institutional buy and sell orders are being executed before the market makes a significant move. Now, looking at this chart right now, you can see that we have our bullish market structure. Now, to identify what that paragraph is saying is that an order block is one of these areas. Okay, you can either have it here. This could either be an order block, or this could be an order block. Now, how did I amount at this level? Now, immediately the prices left its shell and broke that structure at this level. Means it left and broke that structure at this level. It made a reversal downwards. So I'm expecting it to come into an order block, react on that order block before making its move either above it, above the new structure or the new high that has been made, or it breaks the most recent low, having a change of character. Any of these two. Now, this is just a simple term about what I'm saying. Now, once price leave its shell like this, it forms a break of structure. Okay, be it a bullish break of structure or a bearish break of structure. The next thing we'll be hoping on is a reversal that will come. So a reversal coming down would mitigate an order block this way and probably form another break of structure. That's why they said it is where prices get to mitigate it before what? Making a significant move. Now, this motion here is that significant move in which they are talking about. So it either mitigates the order block at this level, or it slides down below, mitigate the order block close to the swing low, which is this angle here, then it makes its move. Or rather, in some cases, might break this swing low, then it actually forms a what? A change of what? Character. So you can have it form a change of what? Character. Any of these could actually occur there, and that is what this message right here is trying to tell you. So I said it is where institutional what? Buy and sell order are being executed, and it makes significant move, which I explained here that it will make a significant move to this up. Either it makes that move to this up, just like it did at this area, it made the move up here. This often act as areas where prices may return before continue its trend or changing its direction. Like I said, it might continue the trend just like we have here, or it might change the direction just as I've explained in this area. Okay, that being said and done, let's know the types of order blocks that we have. Now, the first one is the bullish order block. Now, this form before a strong upward move, act as a potential buy zone. Price may revisit this zone continuously before going higher. Okay, a bearish order block is just the opposite of what we have in the bullish order block. Bullish order block would actually look like this. While on the other side, if we are to look at the bearish order block, we will actually have something closely related to this. So this will act as a bullish order block, you can see, and this is the bearish order block at this area. So this is what it simply this is what it actually looks like. This is what a bearish order block would look like, and this is what a bullish order block would look like. So prices will tap into that zone, then go lower, sometimes might change its character, just as I explained down here. And this also occurred here. You can see that prices, after trying to fit into that other block, it came down and they tried to go up again, then it changed its character. Then we started having a bullish movement at this zone right here. Now you can see that bullish movement at this zone right here. You can see as prices try to make its way up to this upside. Now this is what it actually looks like in a nutshell. Not every other block holds. Even in a bullish market, price may return to a bullish order block. Instead of creating a new high, it might sweep the previous low, then form a change of character. Now I previously explained this, that sometimes you might have prices in this manner. Okay, sometimes you might have, in a bullish market, you might see prices move in this manner. Now we've been having series of highs, then all of a sudden we mitigated this order block at this level, pushed up a little, tried to force their way up, but eventually came down and broke this level, forming or leading to a what? A change of character. Now you can see these kind of situations in the market as well. So it mitigated the other block, which was sitting around this area, tried to move higher, but eventually broke lower, then form a change of character. And that's what I'm trying to explain in that summary. Now, what does this simply means? If you understand what I just said right now, it simply means that the seller have taken control of the market, and it might turn out to be a bearish market. Now, this doesn't say that we'll continue having a bearish market over and over again. The market might change its hand, or it might change its behavior. Okay, so we can have it this way, we can have a break of structure this way, then you have this change of character, then we are hoping for prices to continue this way, now break this way, then back again we have a change of structure. Means we have this change of structure. We took out the bullish movement at this side. However, we had another one which came back to reclaim the market. So we can actually have this in the market as well. How to confirm a reversal? Now, before you enter any trade, make sure it ticks into all these boxes. Okay, the first one is identify the last significant candle. Observe the 3 candles that follows. Okay, check if it reacts in the key level, wait for confirmation or wait for market confirmation, then only take trades that align with these things. Now let's start from the beginning of what I said. Okay, now I said for me to take a trade, if I have to take a trade, I want to see a reversal that comes into my order block. Now, if you've been conversant with my teachings, you should be able to understand how I identify my reversal. But let me just do a quick one for you guys so that you guys can understand how I identify a reversal. Now, like I said identify the last candle. Okay, if I'm to identify the last candle, is the last candle here. Okay. Now, I've identified that candle. Now, I said identify 3 candles that come below or above it, depending on which pattern you are looking at. So if you are looking at the bullish pattern, then you want to see a sell reversal. So you identify the ones that come below it. However, if you are looking at a bearish pattern, you want to see a bullish pattern. You want to see the bullish reversal. So you want to identify the candles that come above it. So it's just an inverse move, okay? And it's quite very simple to do. Now let me just go straight to how you can do it. Now I said identify the last candle, then you want to see 3 more candles below it following their self. Let it follow their self. Don't let it reach above each other. So we don't want to see it above here. We don't want to see it fake out above this level. We want to see it just follow themselves. So we have 1, it doesn't break the last one. We have these 2, it did not break this last one. Then we have the third one, which is this. Now once you see this is a valid retracement. Then the next thing you want to see is for that valid retracement to mitigate your other block. Now for this area, I want to come out with my Fibonacci 2 and rule from the down to the up. So once it mitigates that area, now you can see it fell into one of our 3 zones. So that is a clean order block. Then you enter. Okay, you enter the trade. But then are you going to enter directly? The answer would be no. The answer is no, okay? You're not just going to jump into the trade blindly. So you want to check out other confirmations before you get into this trade. So you might want to check it out on other time frame. So let me just do a brief one, okay? So you might want to check it out. So let's say we are looking at the other blocks at this zone right here. Now you might want to check it out on much more lower time frame. Let's say on the 5-minute time frame, for example. Okay, so I'll head over to the 5-minute time frame like I've done here. So I'll go and look for that zone, and I want to see how the market has reacted on that zone. Okay, so we want to see how the market has reacted on that zone. Now for this zone, if you look at the last one here, the first one didn't react very well, okay? However, when you look at this zone, you see that reaction. So we want to look at the market go up this way. We want to look it go up this way, reverse back, then start moving in its own way. Then we now want to place our stop loss below it. So we're going to be having something similar to this, okay? Then we want to see the stop loss below it in this way, probably to break the recent high to form another structure. These are your checklists that you are going to be looking out for. Before you enter any trade, you ask yourself this question: is this other block valid? Is price reacting at this zone? As market structure confirm this movement? Is there any liquidity nearby? Do you have any confluence? Now, if your answer ticks all boxes, then this should look like a high probability trade. Okay, so that is all that we have for today, and see you guys in the next lecture. Thank you.